If you run a business, institution, or public facility of any kind, you have an inescapable relationship with energy. By simply opening your doors in the morning, you commit to a cash flow for fuel, power, and other utilities. Yours is a forced marriage. No energy means no production and no revenue. If you purchase energy, you are shaping the rate of return on the capital invested in your firm now and in the future. In this 5-minute video, we'll discuss what this relationship means for your business. How important is energy? Many people answer this by looking at energy expenditure as a proportion of the annual operating budget. It may be 5% of total expenses or even less. Another perspective comes from the total cost of asset ownership. For many large capital assets like boilers, chillers, lighting systems, and other assets that operate at 70 to 80% load factors, the capital cost of the equipment itself is minimal compared to the total cost of energy consumed over the asset's economic life. An asset-oriented approach begins by recognizing the value embodied in energy use. This is a whole new philosophy to facility management. Instead of perceiving your facility as a cost to be minimized, it can be approached as an ATM machine that dispenses cash. You are simply redirecting an existing cash flow. Instead of it all accruing to the utility, some of that cash flow can subsidize your operations or your other capital investment needs. Remember that capital is never at rest. It's always in motion, seeking higher returns. The investment opportunities found in the economy will either allow capital to grow positive returns or to deplete through expenses, interest costs, or inflation. Even money buried in a jar is in motion, depleted through the impact of inflation. Your business, just like the economy, provides opportunities to either grow or deplete capital wealth. In the case of energy, the value flows to the utility unless you harvest the waste and plow it back into your business. This is why it's useful to think of energy improvements not as projects, but as investments. When you say project, the word implies a cost that's also a distraction from a daily routine. When you say investment, however, it's understood that you mean a cash flow with a rate of return, all of which cause the business to grow. Any business is a money-making machine. All the capital currently invested in the business structure and its equipment is earning a rate of return. In this example, we see a business that converts 92 cents of inputs into $1 worth of revenue. This business has an 8% rate of return on invested capital. This 8% is a benchmark. Any future investments should provide a rate of return equal to or better than this rate. They're considering a proposed energy improvement with a 25-year economic life. It cost $1 million and saves $250,000 per year for a simple payback of 4 years. After considering finance and taxes, it's an 8-year payback. A firm that wants a 2-year payback or less would probably reject this proposal. As you know, a 1-year payback is a 100% rate of return. 2 years is 50%. 3 years is 33%, and so on when measured without compounding. Remember, our example firm had a benchmark rate of return on invested capital of 8%. 8% corresponds to a 12.5-year payback on invested capital. If this firm observes a 2-year payback investment rule, that describes an investment deadband. That's a range of investment returns less than 50%, yet above 8%, all of which are superior to the returns provided by the capital already invested in the business. By observing the 2-year payback rule, the firm refuses good investment opportunities that perform within that deadband. Not only that, By refusing to improve energy waste, the business commits to an outflow of cash that destroys capital in the form of future retained earnings. Because energy and capital never rest, you don't have a do-nothing option. Sure, you can either accept or reject an improvement, but in either case, you cause either a gain or a loss of some capital value. By accepting a good investment, you get a positive cash flow. If you reject it, you pay a penalty in terms of value destroyed. You can monetize your energy choices this way using the Energy at-Risk Calculator available on the Xcel Energy website. It's free. Videos like this are available there to show you how it's used. On behalf of the City of Fort Collins Utilities, thank you for your time.